In this week's update, dealing with abrupt volatility and positioning for a great 2026, and there's a special offer. And options expiry and low liquidity clouds the analysis. My name's Gary Davis. I'm an authorised representative of Primary Securities, and the information in this video is of a general nature only. A bit of a confusing week last week, particularly in the US. There was, as you'll see from the charts, the first part of the week was just that. It was weak, and there was certainly some concerning signs in some parts of the US market. But Friday saw a pretty decent turnaround. So I'll go through the charts and let them do most of the talking, because it's pretty evident that there was a bit of backwards and forwards during the week. And whether it was due to options expiry or not, I'm unclear. So the summary that I'm going to give this week is that it was a pretty uncertain week, and I'm not really clear where the next part will go. But that's fine, because our approach is to treat the market as it comes, not to have any preconceived ideas. So that's absolutely fine. So in the US, there was some continued profit taking and rotation, particularly in the tech sector, but also in a few other sectors where stocks had gone up quite significantly. So profit takers were pretty ready for doing just that last week. But we did see a very powerful rally on Friday. Now, there was some inflation data that the market looked upon fairly kindly, so that helped. But often options expiry brings a lot of very strange and unusual kind of price activity. So I think that just sort of waters down the impact of what we saw last week. It's a process that occurs quite regularly in the third week of the month, where the markets are manipulated by the market makers to their own advantage. And so you see some patterns and volume signatures that really aren't consistent with the longer term trends. So the best course of action that I concluded last week was to employ some stop loss orders, rather than just make a decision on the basis of a week or two of significant down pricing, was just to put some stop loss orders in there and let the market take you out when there is uncertainty about the short and medium term direction of the market. And of course, we really strongly advise that you obtain all the other investment advice that you need before acting on anything in this video. So let me just show you what I mean by the somewhat confusing action of last week. So this is QQQ, which is the ETF covering the NASDAQ, and it's up until Wednesday. So we're looking at a reversion back to what we had over here. And then we got a very sharp V-shaped rally in the week or two following that, and then it's rolled over again. So that's where we stood on Wednesday. So if you stand back and look at that, we've got a lower high. We've got a fairly tepid rally, small range candles. There's nothing particularly definite about that rally over the last couple of weeks. And then we get a pretty sharp downdraft, which started the Friday before. So we've got a lot more red candles. The red candles are more definite. We've got a lower high. And the note that I made for myself was that if we broke this 583 support level, that would be quite meaningful, because then we would have confirmed lower high, confirmed lower low. We've got the shorter term moving averages starting to roll over, and that wouldn't have been a good scenario. But let's advance the last couple of days to finish the week. And on Thursday, we get a market that finishes higher, but it's quite indecisive. And you can see it's a small range candle. It basically opened and closed at the same point. So that was completely indecisive. And then Friday, of course, we get a significant bounce back. So where does that leave me at this point in time? Well, I just don't know. It's just neutral. I'm waiting to see what the next move from the market will be. And to give you a bit more color, because looking at the indices doesn't really give you the picture at all. You've got to look through 200 charts of individual stocks to get a sense of what the market is really doing. So these are just particular stocks picked at random because of their pattern, not for any other reason. And this pattern was not atypical at all, where we had a very strong rise into the 1st of December. This is a pretty clear, abrupt change of who's controlling the price action. And we got a significant run down to Wednesday, December 17. So that was appearing in many, many cases. So then that was Thursday, so consistent with what we saw with the QQQ. Bit of an indecisive day, smaller range. And then that was Friday, significant bounce back. So looking similar to the index, but a more amplified version of it. So if you decided to just exit on the strength of what we saw up until Wednesday, then you'd be very disappointed at this point in time. So it's always a good practice to set a stop loss at a point which is meaningful. So if we traded below this low here of the 21st of November, then that would be meaningful. That would be indicating a change of direction for the market. But in this case, we rallied strongly on Friday, and we're still sitting in the position in that stock. This is another one, and this is really the art of technical analysis in determining who is it who's in control of the price action. Is it the buyers or is it the sellers? Identifying the points where it changes, and then also how definite is the change. So again, this is where we sat on Wednesday. This was an extremely abrupt reversal on Friday, the 12th of December, and there was follow through in the days following that. So that looked pretty definite. But again, look at how the week finished. There's a pretty abrupt reversal again on the Friday. Sorry, that was actually to the Thursday. And then Friday was a very abrupt reversal as well. So it's very hard to look at that chart and feel confident about where the next move is. Is this going to continue to the upside in another V-shaped rally like we saw over here in the final week of November? Or is it going to break this support level through here and continue down towards the 200-day moving average? And of course, the answer is we have no idea. And if we do have an idea based on this chart, then we're just guessing at it. And guessing is not good practice. Now, how much of this was due to options expiry? The fact that there was a bit of a manipulated burst of profit taking? I can't really say, but I certainly raise it as a distinct possibility. And so therefore, this could well be a week that we can just ignore because it was a bit contrived. It was a bit manipulated. And just looking at one more stock. So again, up until Wednesday, this stock had sold off quite dramatically, and you would be forgiven for thinking that this was the start of a significant downtrend, particularly with the volumes increasing as they did from the prior Friday through to the Wednesday. But it's really important to understand what your purpose and what your time frame is here, because if your time frame is the next 5 years and your purpose is to own a very good fundamental growth stock and give it the room to unfold, then you may not want to do anything about this sort of chart pattern. But if you're a shorter term trader, then this is a signal that you've got to pay attention to. And we've broken the last swing low here. So that looked a pretty obvious exit signal, but let's roll forward 2 more days, and that's what we're now looking at. But whichever action you took, it has to be related to what your purpose and your time frame is. If you're a longer term investor, then you don't want to be jumping out every time the price does something like this, goes down for 3 or 4 days. You will never, ever get the big winners that create real wealth. So either process is fine, either being a short-term trader or a longer-term investor. You just need to know who you are, what you're doing, and be consistent in its application. All right, so back to the action from last week. The S&P managed a fractional gain for the week. The NASDAQ did a little bit better, and almost all that work was done on Friday. And the Russell was down 1.25% So a bit of selling that wasn't recovered by the end of the week. So the rotation continues. There's no question about that when you look across several hundred charts and across all the different sectors. Technology stocks are struggling more than, say, materials section of the market. So it's very patchy, and it's also very patchy within sectors themselves. Now, the US dollar index finished at 98.72. The 10-year yield hasn't really moved very much for a few weeks, but the VIX went down further. I think it was 15.7 or something of that nature last week, and it finished at 14.9. So the market is not, despite that very abrupt price action that we saw, the VIX index didn't really respond. And that's an indicator, I think, that some of that market action was really not much more than options expiry, manipulated price action. Let's go and look at some of the broader index charts and where the money flow is going. So we'll start with the NASDAQ. And this is on a daily chart and looks very similar, of course, to the QQQ. And we also saw quite high volumes on Friday, which is not consistent with this time of year, but is far more consistent with options expiry. Semiconductors were also struggling. If you look at these 3 or 4 days down through here, this looked quite an emphatic burst of selling, yet it all turned around on Thursday and Friday. Looking at where the sectors were, we'll look over the last month, and nothing much has really changed. We saw a bit of a bounce in XLK, but of course that's dominated by the Mag 7 kind of stocks. In Australia, we'll start with the last month. So you can see materials have been leading the way in the Australian market now for most of the last month. Small caps also doing really well, followed by the banks. So the XJO was banks, small caps, and materials that were outperforming the index. And we've got information technology and healthcare were definitely underperforming the index. The S&P, not much happening there, but we certainly did recover towards the end of the week. And that was the NASDAQ on a weekly chart. Was sold off early, did recover on Friday, but not quite enough to make it back into positive territory. So summary of the Aussie Stocks, 65.5 was where the Aussie dollar finished, and we continue in this quite tight trading band between 63.5 and 66. Our index was down 0.8% for the week, but the real stars now are small cap critical metals stocks. They're really picking up the pace. Overall, from a sector perspective, materials and finance continued their leadership. So let's look at a couple of the Australian sectors. So we'll start first of all with the ASX 200. So from a purely index point of view, we've still got the 50-week moving average still moving up quite strongly, providing support. So that's roughly the 200-day moving average. So it's providing support, and we've had a little bit of a bounce the last couple of weeks, and these are all weekly charts. But the key thing to look at here is where the moving averages are. So we've got the shorter term moving averages are moving up very, very strongly. The longer term moving averages are orientated in the right way, and the price is above all of them. So that is a very, very positive breakout that we've seen over the last 3 or 4 weeks. And it's also leading the market quite clearly. And you'll see that when we go to information technology, where we've got our shorter term moving averages have definitely rolled over and the price is considerably below that. Healthcare looks exactly the same. Banks sort of in the middle, and energy also on the downside of the main moving averages. So that's how the market sets up at the moment. So I just want to address, it's an appropriate time of the year to address how to position yourself to have a really good 2026, or in many cases, a much better 2026 than what you had in 2025. So I thought I would just touch again, and I've mentioned this many times in the course of doing these videos over the years, but I stick pretty much to the main mega trends, the sectors that have got really strong tailwinds that are set to continue for a lengthy period of time, as in multiple years. So this is not a short-term outlook. This is a very long-term outlook. So the 7 themes that we're pursuing within the Insiders Club, precious metals, obviously, and both producers and developers are contributing. But as with all sector rallies, we see the money flows tend to go into the producers first and then start to filter down the line to the more advanced developers and then down to the explorers. And we're seeing exactly the same pattern happening at the moment. So there are quite a number of advanced developers that are doing very well in the precious metals space. In fact, there are so many that you really need to find a method to narrow your focus just to the standouts. You know, what are the stocks that are standing out in the crowd because of their resource, because of their strategic value, because of the quality of their management team, whatever it might be. You need to focus on the standouts because there's just no sense in buying anything else. You've got so many really, really solid standouts. The next section is critical metals, obviously, which includes copper, rare earths, antimony, lithium, the main ones. You could throw perhaps tin in there as well, but we don't have too many fish to shoot at in that barrel. AI technology, of course, more limited in Australia. There are certainly some very good options, but of course far more in the States. But the biggest issue, which is still unravelling at the moment, is the issue of the high valuation multiples. And the reset, despite what we saw a couple of weeks back where we got that really V-shaped rebound, indicated that maybe the reset was done and dusted. It's now, we're back to neutral, really, in that sense. Is the reset finished or is it still going? I can't say, but I will be guided by what the market is telling me. The fourth area, of course, is the energy transition, and this is a very broad church. There are so many aspects to the energy transition, but my focus has been much more on the picks and shovels kind of enablers, the stocks that are building the infrastructure, that are providing the servicing to the industry more so than the obvious leading candidates that you would expect. But that is a theme that is going to continue very robustly. And again, there are so many choices here that I think it's important that you stay with stocks that have got current momentum, current upward momentum. When you've got a choice, then you just select the ones that have got the highest probability. The fifth section is industrial technology, and there's some really exciting local options here. Terrific stories that are going to unfold over the next 2, 5, 10 years. So plenty of options there. Medical technology, we've got some established big multi-baggers that have already created wealth for investors, but we've also got some emerging ones as well. Defence spending is the seventh area. We've got limited local choices, but with a couple of them, the upside potential is really quite enormous. So they're worth also looking at. The question around how we're weighted, how I'm weighted personally, how we're weighted in the Insiders Club portfolios, well, it's virtually those 7. These are the themes, and this is all that we do. We don't look outside these themes because we've got more than enough within these to produce very, very good results. So in terms of staying on top of it all, because there are literally hundreds and hundreds of possibilities, I just thought I'd step you through the process that I use on a daily basis. So I've got multiple qualified watch lists for each theme, both for Australia and for America. So everything is in its right box, if you like, so that I can continue the theme in the best possible way. It's a continuous evolving research effort, and this is really important. The analysis that you do today may not be valid in 6 months' time or 12 months' time, or it may be. You don't know, but you've got to continue to keep up with that research effort to make sure that you are dealing just with the best of the best kind of stocks. And then, of course, monitoring the watch lists on a daily basis for both entries and also for exits where it's appropriate. So that's the process that I'm going through constantly. So if you want better, more consistent results, then think about coming and joining us, and we're going to give you an opportunity to do that on a significantly discounted basis for the next 3 months. So to get a really good start into 2026. So the Insiders Club membership provides specific entry and exit recommendations across multiple portfolios. There is a core portfolio for Australia, core portfolio for America. So these are the stocks that I expect have a high probability of continuing to grow strongly for the next 2 to 5 years. And also an early stage portfolio, which is for the emerging companies that are higher risk, they're higher volatility, but they can give you the potential to be big multi-baggers. There is daily analysis and strategy and commentary. There are videos a couple of times a week. So you're never in any doubt about what I'm thinking about the stocks in the portfolio. New members join with a 30-minute onboarding call just to make sure that they understand the process and that they get themselves set up to utilise the resources the best possible way they can. And then there's open-ended email support, whatever you require to make the best job of the opportunities that present themselves. So the discounted offer is $3.99 for the next 3 months. That's a 47% discount to the norm, or you can do it as $379 payments. There is a link in the description below. Now, because this is a very high level of service membership, this is only available until I'm comfortably maxed out to be able to sustain the standard that I'm comfortable with. And that standard is pretty high, I've got to tell you. If you want some validation of the services and the results, then view some of the testimonials on our website. And the overwhelming theme of those testimonials, members gladly forward them to us because they're so pleased with what they've been receiving. And it's very much about empowering members to be far better investors and getting far better results. So that's the Insiders Club and a really good opportunity to kick off 2026 in a really solid, consistent fashion. All right, now getting back to the market, precious metals had a very good week. Again, gold was up $44 for the week and finished at 43.42, or in Australian dollars, 65.70. And in Australian dollars, gold year to date has gone up by 55%. So that's been a terrific performance during 2025. But silver was up 8.2% for the week and finished above 67 and has recorded a 129% gain year to date. So that's been the best performing of the commodities. When it comes to gold and silver, this is not speculation. This is not the market getting too excited and getting punted up too far too fast. This is structural changes that are causing these rises in gold and silver even more so. So the fact that they're structural changes means that we'll get pullbacks, we'll get advances, we'll get pullbacks. But the pullbacks are far more of an opportunity than a danger because the market has just been moved up too high on speculation. And it really gets back to the heart of how global risk is being hedged, the character of that, which is this is a long-term, decade-long change in the way that risk is managed. And it's also part of this getting away from America trade as well. And we're seeing that in the US dollar, in the bond market, and in many other parts of the market. So gold stocks, it was a pretty powerful week for global gold stocks, as you would expect. So let's go and look at some of those charts. So we'll start first of all with silver because this was the most stunning chart of all. So this is on a weekly basis. So you can see the last 4 weeks since we broke out. We broke out here in middle of October, had a couple of weeks of pullback beneath that long-term support and resistance level, and then it's just rocketed away since then. It's getting so steep now that maybe we will get some form of consolidation, but that's certainly a very, very powerful chart. There is the gold price also on a weekly chart in US dollars, and in Aussie dollars, it's been a terrific year, as we've seen. Right, turning now to other commodities. Copper was at 541. It's up 34% year to date, so not as good as gold and nowhere near as good as silver. But I really do think that this is a sector, it's been a long time coming, but we're really starting to see the momentum come into the copper market now. This is also a long-term structural growth story. We've got a widening gap between supply and demand. It's very clear, particularly when it takes 10 to 15 years to discover and build a major mine that's going to make a dent in the dial for supply and demand. There's been too little investment. It's too late. So we are going to have to see higher prices, not only because of supply and demand forcing them higher, but also because the market needs that price signal to increase the investment compared to where it is at the moment very substantially. And of course, we're also seeing it, this part of a lot of the commodities where there is a strong move towards more hard assets rather than US Treasury paper. So developers in the copper space could be the really hot trade in 2026. They've just started to move very recently. Some stocks, particularly some of the early stage stocks, have moved significantly, 50, 100%, but do not think because of that this trade has already run too far. This has a long, long way to go. But again, if you want access to that, then you need to have a plan and you need to understand the way that these sort of early stage developers, how the price action works. And you can still get 20, 30, 40, 50% pullbacks along the way in an overall steep upward trend. So you need to be very clear about what your expectations are. Otherwise, it's very easy to get shaken out of this market. Crude oil also lost a bit more ground last week, 56.52. So that was where crude oil's finished. There's the spot copper chart. So you can see we're in a pretty strong upward trend now. And the signs are, and certainly some of the investment houses are now projecting in excess of $6 in the first half of 2026. Just a quick look at lithium, because I've had a bit to say about lithium. I've been very cautious, as viewers would know, but it's now becoming apparent that the battery energy storage systems are going to be the savior for demand here for lithium. I've been concerned about all of the capacity that could be switched back on that would stop the rally in its tracks. And so far, that rally has extended a lot further than I expected it would. And it's partly because of this strength in the battery storage systems, part of the demand. We've got your renewable energy. We've got AI power demand is just going through the roof. And that, of course, requires more in the way of battery storage. So it's not so much electric vehicles that are doing this. And if you look at the actions of Ford and General Motors over the last week, where they've both basically walked away from some parts of their electric vehicle aspirations, and they've basically written those parts of their fleet down. So that is pretty significant. And that's telling you that some of the traction that we saw a couple of years ago in electric vehicles is certainly waning. But it's the battery, the stationary battery side of things that's really kicking up very quickly. Now, as far as the supply side goes, I really don't know how to think about this one at the moment, because the shuttered production could still return and kill the rally. But that possibility is certainly becoming less and less. So for now, the market is saying no, that this shuttered production is not going to be enough to stop the rally, but that can change. That could change tomorrow. It would only require a bit of a reduction in the lithium carbonate futures in China. Any sort of trigger like that can turn the sentiment in this market very quickly. But increasingly, analysts from the big investment banks are expecting deficits later in 2026. So certainly this lithium story is looking better and better. It's certainly filtering down to some of the more advanced developers. And we've also seen gains here of 50 and 100%. But in the early stages, that's really quite common. So where we go from here is a bit of a question mark for me, but certainly there's a lot more momentum being sustained than what I expected. So I may have to concede the fact that lithium is in a new bull market, or lithium stocks. And certainly we're seeing some of the advanced developers really sizzling there. And there's the lithium carbonate chart. So we advanced, I think I showed this one last week or the week before. So we've advanced again in the last week. So we're up approaching 100,000 on that chart. But again, just pan back and get the bigger picture perspective. And you can look at this two ways. You can say, well, we haven't really moved that far, so therefore is the rally going to be sustained or not? It's not much of a movement really in the big picture. Well, the other way to look at it is that all of this up here above 30,000 was a complete aberration, shouldn't have ever happened, and so therefore is not relevant. That was just short-term market excesses, and that we do actually have quite a significant rally on our hands, and we're up, as far as this chart is concerned, we're up some 40% from the lows. So I guess it depends how you want to look at it. So the final message, fundamentals are absolutely critical. You've got to be dealing just with the best of the best stocks, the ones that have got the high probability long-term growth. But also pair that up with stocks that have got momentum at the moment, because there's quite a few stocks, particularly in the technology sector, that have got fantastic long-term fundamentals, but they've got terrible short-term momentum. So it's fundamentals plus momentum plus clarity of purpose. You've got to know what your purpose is. Are you in there for the next 3 to 5 years to allow a terrific set of fundamentals to unfold? Or are you doing something different? You just need to be clear about what that purpose is. So these are the essential elements of success: fundamentals, current momentum, clarity of purpose, and time frame. So narrow your focus just to the stocks. I think at the moment, because we've got this uncertainty in the market, if you think back to the start of this video, it was only 2 days ago or 2 sessions ago in the US that things looked pretty ugly, with lower highs and significant downdrafts in many of the stocks. But then we got a sudden turnaround. So it's a very unclear situation in the US. So narrowing your focus to stocks that have got current momentum rather than trying to pick bottoms. It's such a difficult thing to do with any degree of consistency. So stay with the current momentum. Portfolio Analyst last week, we looked at how to exploit the huge long-term winners that are certainly out there. And we also looked hard at the 7 themes and some of the stocks that are set for a big 2026. So overall, to finish the year, and this will be the final weekly update for 2025. So 2026 is shaping up as being a year of terrific opportunity. There will be some sensational gains in certain sectors and certain stocks, and that's the case every year. But I don't see that there's any different risk profile to 2026 as we saw in 2025. But I think you've got to be much more focused and much more specific, because we'll probably see an ongoing level of high volatility. So that's it for 2025. I wish everyone a very successful 2026 and have a happy and peaceful Christmas. There's more information on our website. There's my email address. I'll be back with you in January 2026. Cheers.